Alrighty, guys. Happy Saturday. Hope you're all doing well out there. I have my coffee on deck. Cheers, by the way. Thanks for tuning in, guys. And in this video, we have to break down some stocks. Go figure, right? We have to go over 5 stocks I'm looking at and the overall stock market, kind of how last week went and where I see stocks going moving forward. So, guys, hit the like button. Make sure to subscribe and get up to 15 stocks for a moo. Check it out. Once you open up your account and fund it with at least $100, you get 5 stocks and a $30 cash reward, and fund your account with at least $1,000, you get 10 more stocks, and overall your uninvested cash for now will earn up to 8.1% APY, which, guys, that's a no-brainer. So if you guys want to take advantage of this deal, which the clock's ticking, use that link down below or go to stocksurfest.com/moo. Get your money. And with that being said, let's get right into the video. Cheers, by the way, guys. Again, thanks for tuning in as always. So the stock market last week was pretty volatile, right? The S&P 500 chopped all around 585 to 575. We were trading in this $10 window pretty much all week last week, as you guys can see here on this 5-day, 5-minute chart. And Triple Q pretty much did the same thing, right? Chopped around about a $10, $15 window. We hit $500 though on Friday. That was a good breakout there. But up until Friday morning, we were pretty much consolidating, trading sideways between, 498 as resistance and 485, 490 as support. And like I said, it wasn't until Friday where we got the big breakout. We hit over 500, which was good, but that was short-lived. You guys can see Triple Q then got hit the rest of the day on Friday, and it actually bled even more in the aftermarket, going down to 493. So yes, we hit 500, but then we got down to 493 after the bell, which was a drop of 1.3%. So pretty interesting week, no doubt. SPY pretty flat, Triple Q flat until Friday, where we got the pop over 500, and then the Russell was red. We actually downtrended pretty much all week for the Russell, as the 2300 level of resistance is still rock hard, guys. Very, very tough spot for the Russell to get out of. We got hit there again, and look, we sold off for the last couple of days. So Russell is getting a beating, the last couple of days, at least looking at last week's session. And the Dow Jones on Friday, guys, sold off, and it's in a very similar position to the Russell. It downtrended all week. So, guys, heading into the election here, as earnings season is sparking off, we are noticing some selling in the Dow and the Russell, and some flat sideways trading in the S&P and the NASDAQ, right? And we can see on the 4-hour chart, Dow still looks really good, man. No one's denying that. I think we will find support anywhere from 41.5 to 42,000 points, right around the 180 SMA here on the 4-hour time frame. And on the Russell, we're also pulling down to a big support around 2160 to 2200, right by the 180 SMA 4-hour chart. I think that could be a spot of support here. The S&P, looking at SPY, is right at the 180 SMA right now at about 574, 575. That should act as support. And Triple Q, ladies and gentlemen, it bounced off the 180 SMA. We actually took out a multi-week high with the push over 500. But like I said, now we're pulling down back to 495. We're pretty much right by the 50 SMA right now. So let's see what happens at that point. Either way, guys, we're looking really good right now. The bulls are in charge on all of these indexes, despite the Russell and the Dow selling off last week, and the sideways action on SPY and Triple Q. And another thing worth looking at is the VIX. The VIX is the volatility index, which closed over 20 points on Friday. So heading into the election, More companies reporting earnings. Don't be surprised if the VIX, creeps up or at least stays in the low mid 20s. I would not be surprised if it stayed here. So, what do you guys think? Let me know your thoughts in the comments. And by the way, join the email list. It's free. I have a link in the description box. If you put your first name and your email, I send you every Monday my top 3 stocks for the week. And again, it's free, no spam, no BS, just straight up value. Check out that link right down below in the description box. And let me show you now some stocks that I'm looking at that all reported earnings this past week. Number 1 is UPS, which after their earnings, this stock broke out of this downtrending channel, and we got all the way up to about $146 per share. Very big move, man. We're talking 11-12% in the green there on that day after earnings, and now we're right back down to 137. It looks like we're trying to bounce maybe off of the highs from the end of September, maybe off the top of this channel now. We'll bounce off of it. Either way, UPS is a stock I'm watching. It's actively breaking out after the company reported earnings where it looks like they double beat. Adjusted EPS came in at $1.76 versus $1.63 expected. Sales $22.2 billion versus $22.14 billion expected. So double beat for UPS. Let me see anything here on guidance. Not seeing anything on guidance, but it looks like here we did get some price target increases from Susquehanna. Looks like Raymond James, which is good, I guess, in the short term. So keep your eyes on the overall breakout here on UPS. I'm liking it. American Airlines also reported earnings, and they're breaking into the next gap here, guys. The next huge range, which could bring the stock arguably up to 15, 15.50, 16, maybe even higher. So AAL, American Airlines, went up around 3% on Friday, and the company beat on EPS and on revenue, 30 cents adjusted EPS versus 15 cents expected on sales of $13.6 billion versus $13.47 billion expected. So double beat for American Airlines, which is very good news. Anything on guidance? Not seeing much here. But it looks like BofA Securities maintains underperform on American Airlines. They raised their price target to $10, so BofA is not that bullish. But JP Morgan has an overweight and a $20 price target on AAL, which that's not bad. We're at $13, guys. Hey, so at this point, this looks like it wants to continue breaking out. We took out the $12.80 to $13 resistance, which was support, it looks like, back in the middle of April. So this could be setting us up for a break, maybe towards $14, $15, maybe even higher. So AAL, I like how we're getting out of here. We're trading in this window right here. You guys can see now. And we also had, had another airline. Oh my gosh, guys, talk about a voice crack there. Cheers. Let me actually get some coffee, guys. Oh man, I need some coffee for sure after that. Oh man. All right, there we go. So we also had LUV, which is, you guys know, Southwest. My mind's still on American Airlines. What's going on here, guys? So we had LUV report earnings, and their stock, well, did not do well. You guys can see here we hit $32 after earnings came out. So I guess we popped originally, but then we bled down all the way to $28 per share. So let me see what LUV ended up reporting here, guys. Give me a second. By the way, hit the like button. Make sure to subscribe here on YouTube, guys. What are you waiting for, man? So looks like LUV reported 15 cents of adjusted EPS on revenue. Where the heck's the revenue number, guys? Am I losing my mind here? It looks like $6.9 billion. So I'm not seeing the estimates here. It is what it is. But yeah, that's what they reported. 15 cents on $6.9 billion of revenue. and their stock is not looking the best right now. I mean, it is trying to hold above this level by a thread at $29, which was resistance all throughout, the middle end of March up until pretty much the end of August. Then we broke out of it, got to about 32. So now we're testing 29, 30 bucks again as support, which let's see. This spot might hold. Maybe we get a bounce off here, maybe a relief rally on Southwest Airlines. And we also had Dexcom report earnings, which this stock, last time they reported earnings, got devastated. I mean, look, it went down from $112 to $63 a share. Guys, that is insane after an earnings report for a stock to go down 43%. That is unreal. So Dexcom reported earnings, let's see, EPS of 45 cents. There we go again. Adjusted EPS versus 43 cents expected. So that beat. And sales beat $994 versus $990 million expected. And they guided for full year 24 revenue of $4 to $4.05 billion versus the estimate of $4.01 billion expected. Pretty good guidance for full year 24 revenue, and a nice beat on EPS and revenue the last quarter, which I'm surprised the stock didn't shoot up even more, to be honest, considering how much it's been down over the last couple of months. And, it really didn't do much after the initial drop last time they reported. I mean, look, they consolidated for 3 months. So that's another reason why I'm like, I don't get it. We had a huge drop. We consolidated for a couple of months. Now that earnings were pretty good, guidance was strong. Why isn't the stock moving? I don't know. But we'll see. I think we could get some momentum this upcoming week, in my opinion. And the next one here, the last stock on the list, ladies and gentlemen. Thanks for sticking till the end. I appreciate you all for tuning in. And by the way, let me know in the comments if you stuck till the end. Drop a fire emoji, say stuck till the end, or something like that. We had Deckers Outdoor Corp. This company owns brands like UGG. You guys know UGG shoes, the slippers, the boots, whatever you want to call them. They also own, I believe, Hoka, right, which has become very popular running shoe. You guys know Hoka. I'm sure a lot of you know them. Not even just for running, just for like walking, athletic wear in general. Those shoes have crushed it, right? They've done very well over the last couple of years, especially. Deckers owns them, right? Deckers Outdoor Corp. And this company reported earnings, I believe, on Thursday, and their stock went up 11% on Friday. So very big move for Deckers, ticker symbol DECK. So they reported, let's see here, guys. Then we'll wrap up this video. GAAP EPS of $1.59 versus $1.23. So that beat. Sales 1.31 versus 1.2 billion. So double beat. And they guided for full year 25 EPS of $5.15 to $5.25 on sales of $4.8 billion, which pretty much both of those were right in line with expectations. And to give you guys an idea, it looks like they did Hoka sales of $570 million. So about a third of their sales, at least last quarter, came from Hoka. Hoka, that brand, the different shoes they have, which again, they're very comfortable. I've never owned them, but I've tried them on. When I bought shoes, I actually went with Asics myself. I like the Asics. What the heck are they called? Like Gel Nimbus 25, some crap like that. I don't even know. But either way, whether it's Asics, Hoka, they're both very comfortable. Hoka's very comfortable. And, a lot of people are buying them. The proof's in the pudding, man. It's in the sales numbers. And now Deck is breaking out, man. And I think this could be touching 180, maybe even higher at some point in the short term. So, yeah, what do you guys think? I'm not long any of these stocks right now, but I'm considering them heading into this week. Especially stocks like Deck, which is, having momentum build up. AAL is on the verge of even more upside, in my opinion. These are two that I'm looking at very closely. All of these are. But those two in particular, I'm looking very closely at as trades. So what do you guys think? Let me know your thoughts in the comments. Run the likes up. Don't forget to subscribe. And shout out to everybody that's joined the Patreon. I appreciate all of your support. As always, I'm building my private portfolio there. You guys see all my moves every single week. I'm putting in money every week, so you guys get to see how I'm building out my portfolio. There's a Discord chat. You get my charts and ideas throughout the week as well. So check out the Patreon down below in the comments, in the description box, or go to StockSurfS.com/Patreon. And with that being said, I'll catch you guys later.